Our final presenter is someone who has helped thousands of traders simplify their approach to the markets. David Wyse is a professional trader, educator, and creator of the SPY Super System. And you can hear his dog in the background.
Yep, some guests coming here.
Yeah. And his trading room is pretty fun. In the Options Live trading room and SMS alert service at Right Line Trading, check it out. Rather than relying on one indicator, David teaches traders how to continue trend momentum, institutional participation, volume, VWAP, and key support and resistance levels into one repeatable decision-making process. Today, he'll show you how to transform market noise into clear, high-probability trading opportunities. Everyone, please welcome David Wyse.
Thank you, sir. Appreciate that so much.
Thank you.
I think my dog's calmed down now. We had somebody had the audacity to come and try to deliver a package to the house, so he took care of that. Thanks a lot. I appreciate it, and thanks everybody for being here today. Again, my name is Dave Wyse, and I have a trading room that I train options and some stock, but mostly options all day long. Market open to market close. We use a piece of software called the SPY Super System that I'm going to go over with everybody today. Also have a text alert service where we send out our most high probability trade setups and to members of the alert service. So we'll get right into it and get started. I know it's been a long day for everybody, and I'll try to make this as quick as I can, but I do want to cover some really important information for everybody to try to become consistently profitable. I think that's everybody's goal when you trade, is to make money. It's not necessarily to make trades, it's to make money. Okay, so let me first of all go ahead and do the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, we're going to talk about indicators that we use for trading. One of the things I'm going to cover, and I'm going to kind of break this into two different sections. I'm going to go over a section on the SPY Super System. We're going to take a look at specific charts. We're going to take a look at the actual charts, the indicators, and examples of trades that we take. We're going to go over the profitability of how these trades have worked. I have my win rate this year is 88%. It's typically between 85 and 90% every year. And we're going to talk about all those things. I'm going to show you how to identify those high probability trade setups on the chart. I'm also going to bring up some live charts today that we can look at if you would like to have any trades examined. We want to take a look at the trades from a technical standpoint, and from the indicator standpoint, we'll do that. But we have what I guess what you would call a must-have indicator. Everybody likes to think that there's one indicator you can use for doing trades. It's really not true, but everybody has one that they feel is important. And I am looking at an indicator that I use. I'm using the SPY Super System indicators, and I use them for intraday and swing trades. And the one that's the most important for me is what's called momentum. Okay, so we're going to get into this a little bit here. And this will make a little sense later at the end if you're here for the last portion of it. We're going to talk about profits and harmony and how we identify these setups. Okay, and it's one thing I do want to cover real quickly is who moves the market. How does the market, the overall market, move? We've got two groups of traders. We have retail traders, such as myself, and most likely everybody here in the room is a retail trader. And then we have institutions. These are the folks that have the money that push the market. These are who create trends, break trends, etc. Everybody knows about institutions. I look at institutions as four different groups: investment banks, Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America. Those are the investment banks. And then you also have pension funds. Pension funds are huge. Pension funds for police, firemen, state workers, lots and lots of billions of dollars in these pension funds. Then you also have hedge funds. Hedge funds, another massive amount of money that's available for trading and for investing. And lastly, there would be mutual funds. And those would be things such as T. Rowe Price, Vanguard. Those are the folks that push the market. When they're moving the market, we want to take advantage of it. When there's not enough of them pushing in one direction, we don't want to be in the trade. So when retail traders are trading, and there's not an awful lot of institutional involvement in one direction, I mean, the institutions are in there all the time. They're buying and they're selling all day long. But what we're looking for is the situations where all the institutions or many of the institutions are pushing a stock or an ETF in one direction. We want to jump on board. When they're not, and most of the trading is being made up by retail traders, what you get is a lot of chop and a lot of chaos. If you feed the market chop up and down, can't get any footing. Typically, the retail traders are the people in there trading. The institutions are just trading mostly with their programs, with what's called algos. And institutions, by the way, do most of their trading through program trading, which are called algos. Algos are programs that they have set up that look for specific conditions, and they look for conditions, indicators, etc., to buy and sell. And they can do a great job of that. One of the things they can identify is if you have a stop on a trade. If there's enough retail traders with a stop at the same level, they can identify that, they can bust it, and then break it back up again. I don't know if you've ever been in a trade where you put a stop on it, it broke down by a few pennies, and then popped right back up above it again. You likely had a stop at a level where there was an awful lot of traders with the same stop level. The institutions identify that and they take advantage of it. So that's what they can do with the algos. The algos do most of the trading, and a prime example of an algo is if you looked at the market when the FOMC came out on Wednesday. We had the Fed announcing their interest rate hike or no hike. What they did was they held the levels, they had held the rates the same. What you look at is if you look at the SPY on a 5-minute chart or a 1-minute chart, you're going to see a huge amount of volume come in exactly at 2 o'clock. I mean exactly at 2 o'clock. 2 o'clock and a millisecond, all of a sudden you get a huge spike in volume. Well, that's the algos who read the report. They actually can read it, and they put their trades in. And it happens in way faster than you can even click your mouse. So those are the algos, and you can always tell when they're in their those trading those kind of events, jobs reports, FOMC, any kind of news reports that occur during the day. You'll see a big spike in volume. Those are the algos. All right, so that's what makes up the market, and our job is to identify when the institutions are moving in a stock in force and take advantage of that, and that's what the SPY Super System does for us. Okay. I'm going to bring up the question box too, so I can see if there's any questions. We go through this, okay? And you can ask any questions for me as we go along. I'll try to answer them as we progress here. All right. SPY Super System. I'm talking about my intraday strategies and my swing strategies. We do swing trades and we do intraday trades. We do a lot of intraday trades when the market is choppy, and swing trades typically when the market is giving us a decent direction. And so we want to have enough methodologies that we can use to trade in basically any kind of market. So we have two systems for doing intraday trades. We call it's called the SPY Super System. We use the actual SPY Super System software to identify when a setup is on for example, in the SPY, the Qs, the IWM, futures, and even stocks. These are the trades we make on, and I use a 5-minute candlestick. So I'm just trading off of 5 minutes. Right, so this is called the SPY Super System. Then we have another methodology called UMCAT. These are UMCATs for high momentum trades. It stands for out of the money catalyst. This is the only time I ever take out of the money puts and out of the money calls, just for intraday trades and only on stocks that have extremely high volume and high momentum. And this I actually created or used starting last November 17th, and I'll show you the results I've had with that. But the reason I did this was because if you've heard of what's called the PDT rule, or the pattern day trader rule, if you didn't have $25,000 in your account, you can't take but 3 intraday trades in a 5-day period. That's gone away now. Everybody's lowered it to about between 2,000 and 2,500. So now you can take as many day trades or intraday trades as you want. You can open and close as many trades as you want all week long. So I put this in because this is an intraday trade. You basically would either have to have 25,000 in your account or have just a cash account. But basically, it eliminated a lot of people from being able to intraday trade. That goes away, and I figured there'd be a lot of people coming into intraday trading, and I think I'm right. We have a lot more people now trading intraday. So this is a high momentum strategy. So those are the two that we use for intraday trades. Swing trading, we typically do use calls and puts, straight calls and puts. This is fairly normal. Also straddles and strangles. These are what's called non-directional trades. These are trades that we take puts and calls on the same stock, either at the same strike price or different strike prices. And we don't care which way the stock moves. We just want it to move a lot. So it's a non-directional trade. We also do debit spreads using weekly options expiration. Time spreads over earnings, which have been very, very successful in the last couple of weeks as we're in earnings seasons now. These are non-directional trades. They anticipate earnings when they come out. What we do is we take advantage of the implied volatility increase in option prices. The market makers increase the price of options just prior to earnings because they don't know which way it's going to move and they don't know how much it's going to move. So that increased the volatility. So what we do to take advantage of that is we actually sell a current week's call, basically at the money, and we buy next week's call. That what allows us to take advantage of the implied volatility, what's called the implied volatility crush. When the options come out, or when the earnings come out, and the stock starts trading, now the market makers know which way the market's going to go, the stock's going to go. They know about what the size of that move is going to be, and then they adjust the premiums to reflect that. This allows us to take capture the difference in that. It's a volatility crush trade, and I'll show you a couple of those. We did. I've got 2 on tonight. We've done 8 this week, and had winnings in all of those. We also have a weekly ATM strategy. This is a methodology to take a neutral to bullish stock and sell puts against it every week to bring in premium, and then also maintaining a longer dated put out in time to protect it, give it basically a protective put to the downside. And we do credit spreads to capture premium over a few weeks. These are all of the methodologies we use for intraday and swing trades that we trade in the room. We want to have enough trades, enough methodologies that we can use to take advantage of most any market. Okay, again, momentum is a catalyst. This is what I'm looking at for option trading. Every trader has one indicator that he feels like a secret weapon, and the one that turns noise into clarity. And for me, it's momentum, and not just momentum in theory, but the current time frame momentum paired with volume. Those are that's the thing that gives me the indication that the institutions are very likely in the trade, right? Again, momentum is not prediction. It's a confirmation. It's the moment the market tells you I'm moving. Are you ready to move with me? That's what we look for. Okay. So the critical indicators for this, and I'm going to show you this on the SPY Super System: current time frame momentum and multi-time frame momentum. We have the momentum looked at in 2 different time frames, and we use that in conjunction with high volume candles to uncover institutional activity. This is what we're looking for. We're trying to find institutional activity to basically jump on the bandwagon and join them. Okay, and just for a kind of a clarification on what momentum is, because I think it's misunderstood by a lot of traders. If you just see some green candles stacking up, that's not necessarily momentum. The way we measure momentum is we look for, assuming these are 5-minute candles, the black first line here is the open, the high is the leather black, and the blue is the close. So what you're looking for is high volume, you're looking for bullish candles where the close of each candle gets higher and higher to the high of that candle. That's momentum, and this is momentum to the downside, where the close of the candle gets closer and closer to the low of the candle, right? So that's what momentum is. That's what we're measuring. Okay, so in the room and on the alert service, we have a couple of rules we trade by. Again, we have hundreds of people in the room every day that we work with and work with them, answer questions. A lot of them recommend trades for us. A lot of our trades come right from the members. So the rules to trade by: trade the best and skip the rest. We're just looking for the very highest probability trade setups. Sometimes we have to wait a while for that. I barely could find any today, even though the market was gapped up and was moving up nicely. It was kind of chopping to the upside with a lot of resistance. So there wasn't an awful lot of good trades you can get in and stay in for a while. We had some winners, but we want to trade the best and skip the rest. Some days there's a lot, some days there's not too many. Second thing is, our objective is not to make trades. Our objective is to make money. The point of this question, or this statement here, is to keep people from over trading. One of the biggest problems that a lot of retail traders have, especially day traders, is they trade too much. They make too many trades. They always feel as though they have to have a trade on. That is not the case. We just keep in mind when you're going to trade, keep that objective in mind. Your objective is not to make trades. It's to make money. We're trying to make money. We only do that by taking the very best trades. So what difference does it make if you take 3 trades a day or 30 trades a day? If you make money on 3 trades a day, you probably can make more than taking 30 trades a day, because you're going to have a bunch of losers because you're not taking the very best ones. Okay, maintain discipline. This is learn and follow the process. That just means I have specific criteria that we use for finding a trade. I'll share that with you, and you want to learn that and stick to it. Basically, that means don't be listening to posts on social media recommending this trade or that trade, or somebody is on CNBC, on Bloomberg or something talking about a trade. You want to find the methodology that we use, stick with it, and find the trade yourself or in the room, because those are the ones that are going to work much more frequently than anything that you're going to read about or hear about from your brother's long lost friend from high school. Give him a tip. Okay, and remain patient. This is another key thing here. Remaining patient is probably the hardest thing most retail traders have to overcome. When they're sitting in front of the machine, they feel as though they always have to have a trade on. You don't. You don't. No trade a lot of times is the very best trade. All right, and we need an edge. As a profitable trader, we need an edge over other retail traders. We're taking our profits from other retail traders. We're not taking money from institutions. We just want to know what their institutions are doing so we can follow them. So the edges we have is the SuperSystem, SPY SuperSystem software that I'm going to share with you. This is the key thing. This tells us what the institutions are doing. Then we trade what's called relative strength and relative weakness. This shouldn't be confused with the indicator RSI. RSI is relative strength indicator. To me, it's just a piece of garbage. It doesn't work. What we're looking for is how a stock is trading in relationship to the SPY. The SPY is moving sideways or maybe moving down, and your stock's moving up, then it's got relative strength. And vice versa on the relative weakness. Those are going to outperform the ones that don't have relative strength and relative weakness. And then we trade with the market trend if there is one, and buy near support and sell near resistance. You need to know where your support resistance levels are, and you want to get into the trade as close to those as possible. 2 reasons. Main reason is if it fails and it goes against you, your loss is going to be much smaller, because you're going to be very close to where you actually get into the trade. If you chase the trade way up when it's moving up fast or moving down fast, and you get a long way away from support resistance, if it fails on you, the loss is going to be much, much bigger. Right? So those are our edges. Okay, and in the SPY Super System, everything is color coded for the bullish and bearish. Green, anything you see green is a bullish strong. Blue would be bullish trending. Red is a bearish strong, and yellow is bearish trending. That's the color codes in the SPY Super System. I mean, this is it right here. This runs on Thinkorswim or Ninja. I use it on Thinkorswim. Now, it's important to point out that I don't trade on Thinkorswim. I can have this on Thinkorswim to get my indicators, but I don't trade on Thinkorswim. I don't have to trade on Thinkorswim. I actually trade on Tradier, but you can trade on any platform you want. But this is what the indicators look like on Thinkorswim. This happens to be an example of a 5-minute chart. We'll look at a lot more. This is on the SPY. The key things here is this is the current time frame momentum. This is a 5-minute chart. Right? So this is the current time frame momentum. This tells you what the momentum is right now on a 5-minute basis. The next one up here is the multi-time frame. This is telling you what it's looking at 3 different time frames. It would be the 5, the 15, and the 45. If this was a daily chart, it would be the 1 day, the 3 day, and the 9 day. It's looking across all 3 of those time frames to determine if institutions are in there. So this gives us a really good indication if the institutions are in the trade. When it's green, they're likely in it long, and when it's red, they're likely in it short. Blue and yellow is just kind of trending, but blue and green are both bullish, and yellow and red are both bearish. Right? And this is the long-term trend. This I use on swing trades to identify market trend along with some other things, just to give me more conviction that the trade is likely to work. Okay, up here, this is a 5-minute chart. Now, these are the indicators we use for intraday trades, right? We look for support resistance levels on intraday trades that we want to trade. This first one is here is called the VWAP, volume weighted average price. If you're a trader, that should be on all your 5-minute charts. You don't want it on your daily chart. It's not effective, but it is effective on your 5-minute chart. It's a level that all the institutions use to get in and out of trades. It's a very key one. They all use this. They all know where it is. The second one is here. It's called the 15 EMA, 15 exponential moving average, the green line right here, right? And the third one is the 8 exponential moving average, this white line. All of those levels can be considered support resistance levels. So when we typically enter a trade intraday, we're typically going to be, if we're going long, we're going as the stock breaks above one of these levels. If we're going short, we take it if it breaks below one of those levels. Okay, those are our support resistance levels. Now, one of the important things here is if you look at the candlesticks, green is bullish, red is bearish. That's standard colors. All right. The white candles right here, these are bullish candles, but they're high volume candles. These are showing us that institutions are coming in here with force because there's a high volume candles. Again, you've got white ones. Those are white candlesticks. Tells you there's high volume coming in on this 5 minutes after 5 minutes after 5 minutes. Institutions are buying here pretty heavily. And it gives us a good indication that institutions are in. Now, for the strategies that we talked about, the UMCAT strategy, the method of using out of the money puts and out of the money calls, our methodology calls for only taking UMCATs, or out of the money puts and calls, which are cheap. They have a really good return, but you only can take them if you've got white candles for a long or yellow candles for a short. And I'm going to show you some of those trades live on the charts today. So this is the SPY super system as it appears on Thinkorswim. There's some scanners and stuff I'll show you a little later, but this is what it looks like. If you buy the software, it's going to look exactly like mine. I have it displayed in the room every single day from market open to market close so that we can take a look at stocks under that. One other thing that shows up in here is the market internals. This VOLD here, this tells us what the overall market's doing right now on a 5-minute basis. And I don't mean not just the SPY, but all the 6,000 stocks in the market. This tells us what the market internals are. Gives us a good idea of market strength or weakness in either direction. All right, so there is your SPY super system. This is a piece of software that runs on Thinkorswim. You can buy it. It'll put it on there. It's always going to look like mine, but it's a key to knowing whether institutions are in the trades or not in the trades. All right, and these, by the way, I just identified. These are the bullish high volume candles. This is a trade we did on AMBA, right here, AMBA, 5-minute chart. Right here, you see how it goes from red to blue. That's buying. Blue is buying, red selling. It goes from selling to buying, and you notice where it did it right here with this high volume candle breaking above the 8 exponential moving average. There's your trend right there. This you could have just ridden right up as long as it stayed above the 8 the whole way, right? And by the way, when the 8 is white, the white line is above the green line here. When the 8's trading above the 15, that's a bullish trend. When the 8 is below the 15, that's a bearish trend. Very important to try to trade with the trend. And you also typically only want to go long on intraday trades if the price is above the VWAP, and only go short if it's below the VWAP. Not really complicated. This is really pretty much all you need to find the best trades here. And over here, I'm going to go over these are the scans, how we find some of our stocks. All right, so that's AMBA right there. And here's some bearish candles, high volume bearish candles. This was on Futu. This was an UMCAT trade I took. You notice the institutions are selling. See, it's red, right? High volume candles, yellow candle. High volume candles coming down below the 8 exponential moving average, which is below the 15. So this is bearish. I take it right here, and I can ride this down as long as I want to stay in. I got out right here when it went flat, but you could have stayed in it as long as it stayed below the 8 and it went down. It was made a really nice trade. Okay, and again, if you have any questions, just fire them off, and I'll be happy to answer them for you. Okay, and I'm going to show you a couple of real UMCAT trades that we've taken recently, just so you can kind of see this in action. This was an UMCAT trade in Oracle back, I think probably February. It was a while back, but I'm going to show you some live ones today. But this was Oracle, and looking at the key indicators here, you see the current time frame momentum, which is the main one we use for intraday trades. We typically don't go to the multi-time frame until we're going to take a look at a swing trade. But you notice how it's red here. Selling is taking place. the institutions pushing this stock down below the 8, right there on that yellow candle. High volume, breaking below the 8. The 8's below the 15 is bearish. And here's a little blue arrow that you see. The SPY Super System puts that in there when the stock is breaking compression to the downside. Okay, very important. This was where I took the trade. I rode this thing down for about 6 or 7 candles from in here down to here. I get in for $72 a contract. Very cheap because it was out of the money. I was buying stock that was below where the price actually was. Get in for out for $125 about 35 minutes later. So 10 contracts would have cost you $720. Get out for $530 profit in about a half an hour. Okay. Hey, Lakshma, am I able to place limit orders on UMCAT trades since the options move so fast? Oh yeah, you can. Sure. I mean, you have to be UMCAT trades that are by definition quick trades. So you have to be very quick to get in, and you've got to, you have to look at the option chain and try to pick it right in the middle of something. But you want to get in as quick as you can when it's set up, because they can move very quickly. So I would typically, I would never recommend taking a market order unless the spread was tiny, like if it was on the SPY or something and there's a 2-cent spread. But if the spreads are wide at all, by 10 or 15 cents, then you're going to have to do it on limit order. Yes. Okay, so that was the UMCAT trade in Oracle. This was one on Frog. This was a massive trade. This was the best UMCAT trade I've had this year. This was on a stock called Frog. You see how the institutions were kind of going back between buying and selling, You have some nice compression here. The stock was riding along the 8 right there. And now I get a breakdown. I get a yellow candle. I mean, that's high volume. The institutions are doing a selling right here, right off the 8. Okay, so I take it there as the 8 is below the 15. I take it. Everything's set up bearish, right? We're below the VWAP. The 8's below the 15. We got high volume candles to the downside. Institutions are selling. You can see it went from blue to yellow right here, and then it went to red. So I take it right here. Now I took an out of the money put on this. It was trading at about $43, $44. I took a 39 put on this, quite a distance away. But when I get into this, I paid $30 for it, and when I get out right here, I get out for $200 a contract. So that's a $1,700 profit on a stock a trade that cost me $30. Right. So if I buy 10 of them, it's costing me $300, and I sold it for $2,000 for $1,700 profit. This is what you look for. You look for these, and these don't happen all the time. This is very rare to be able to get that kind of move. But this stock was up 100% in about 2 candles or 3 candles. And I actually left money on the table. If I'd stayed in it, you see how it dropped some more. But I had my sell order set in there, and I took profits right there. Okay, so that's the UMCAT trade in Frog. This is about as big as you'll see most of the time. Typically, they're going to run somewhere between about 50 to about 150% profits on these things. And that's what's nice about UMCAT trades. They're only can be used for specific setups, using out of the money. But when they work, you get a huge return on investment. So they're fairly cheap to get into, and they can return a lot. You just have to find them. All right, here's Netflix. This was another one, the long, just so you can see the structure here. There's candlestick is the current time frame momentum is blue, went from yellow to blue. Here's the breakout. Notice we got the 8 breaking above the 15 and above the VWAP. It's breaking out all of those levels right here. We get in right here and rode it up. See the high volume candle? So I can take UMCAT trades and high volume candles. I get in at $35. I get out at $70 right here. Right? Just rode this up. It starts to turn around. I'm out of the trade. Right? It's 100% profit. That's how we use these UMCAT trades. And this was a trade in Intel. Now again, see they're not always big, huge winners. I wanted to show you this one. You can see the institutions are buying this here, right, along the way. Now I didn't get in this early. I typically don't take any trades before 10 o'clock. I wait to see what the market's doing. So I didn't take it here on this early morning breakout, and I waited. And this is where I took it, where I got a high volume candlestick breaking above the 8 and the VWAP and the 15 with a pop out of the box symbol. Tell me I have a compression break. I take it right here, and I write it up, and it just kind of rides along the 8, and I had to get out of it here as it breaks down below the 8 and the 15. I was in for 247, out for 277, 13% profit. So you are going to get smaller wins like that, and you're going to have some that lose. But the overall percentage rate on these things, percentage gain, is about 86% win rate, and it has a profit factor of about 4.5 right now, which is extremely high for a profit factor. If you don't know what profit factor is, you can look it up with an AI tool. But a profit factor of 1 is break even. A profit factor is 2 is twice as much win as losses, and it goes up from there. 4 is really high. Okay, and this was the frog one. We already just looked at that one. This was a trade on Meta. I didn't show where I get in or out of this, but you can see the institutions selling the heck out of this thing here, all red across the board, but it's moving sideways. I'm looking for an opportunity to get in. I didn't mark where I get in, but what I would have done was get in right here where it broke below the VWAP in the 15, in the 8 with a high volume candle. I had high volume candles all the way along here, so I could have taken it anywhere in here, but typically I would take it as I get a break of compression, and then I'd ride this thing down, right? And this one I get in for 595, out for 945, 67% profit just by following this down. That's all I had to do. And Meta's pretty expensive. That was $595 a contract for Meta. Okay, Verizon. This was a very quick intraday trade. I took it right here as it broke down again. You can see it's bearish. Has to be bearish for a short. It's red. I take it here on this breakdown. I just enter on this candlestick, and I'm in it for 10 minutes, and I'm out right here. And that was in for 17 cents. I was out of the money. I was taking the $41 calls, $41 puts. When I was trading at 41.50, they went from 17 cents to 34 cents in that quick period of time. 100% profit. Again, you have to be quick. And these trades here, I can't post. I just let you know when I see them. But these are the ones you have to find yourself, trade yourself at least. I do point them out when I see them, but I have videos on all of these the structures of all these particular setups. Okay, and this was a Tesla here. This was a day trade in at 380, out at 580. This is where I get into Tesla. Again, selling, yellow, buying right there. Institutions coming in with volume. That's what you're looking for. I take it right here, and I ride this up. And I stayed in this quite a long time, it was stayed above the 8 the whole way. And I get out right here on this little pop. I had a sell order set at $2 profit on per contract. So it's 68% profit in an hour on that trade right there on Tesla. Okay, and just want to show you a couple of swing trades we've had recently, just so you can see that this works on swing trades just as easily. These are daily charts now. Now right here, you see how we were bullish down here, and then the multi-time frame went bullish. They're both blue. This is where I took it on a high volume candle right here. I get in for 11.30, and I get out for 13.30 the next day, right here and out here. Just overnight, got a nice move up on a high volume candle, and I took it off right there for $200 profit for a contract on Apple. Again, these are again, you notice I don't have any VWAP on here. I've got the 15, I got the 8, and I got the this is the 50. The red line is the 50, and the purple line here is the 200, and the blue line is the 100. Those are the simple moving averages that you should have on your daily chart: the 50, the 100, and the 200. Okay, so you know where the support and resistance levels are. Okay, and this was an Oxy trade, in for $1.30, out for $2.34. 80% profit on this thing. This was a pretty big trade. I took it right here. You notice that we were buying, the institutions were buying right here. They went blue to green, and the stock moved back right here to this white line, to this 8 exponential moving average on the daily. That's the bounce I took, and I took it on here, and I get out right here. And that was a 80% profit on that move right there on Occidental. Oxy is an oil stock, very susceptible to news, especially in the current environment with the Strait of Hormuz stuff going on. So that was a nice move right there, $1,040 profit in Oxy for a nice 10 contract trade. But again, you can see institutions buying. They continued to buy, but you see how it ran up against this red line right here. That is the 50 exponent, the 50 simple moving average on the daily chart. That's a resistance level, just like the 100 is right here on these charts. These are resistance levels and support levels that the institutions use. The 50 is red, blue is the 100, and the purple down here is the 200. Those are all support resistance levels that the institutions all use and all their algos also use them. Okay. All right. So SPY Super System, again, it means two things. The software is called SPY Super System, and the methodology we use using intraday trades for in the money puts and calls, not out of the money, not UMCAT trades, but just in the money puts and calls. If we're doing especially on the SPY, the Qs, the IWM, we call it the SPY Super System, right? Then we have the UMCAT. So these are the two strategies that we use for intraday trades. SPY Super System is also effective for swing trades. We're using the same criteria on the intraday and on the swing trades as we do for the intraday trades. Same criteria, same setup, right? We're just using daily chart instead of 5-minute charts. Very important to use your daily charts when you're trading. Even for an intraday trade, you should have your 5-minute daily chart you should look at and see if you're going to get any resistance close by. Okay, UMCAT trades. This is my performance on UMCAT trades since November 17th up through July 8th. I haven't updated it, but this is taking trades. I was risking about $500 per trade. I had to have a few that were a little bit more than that sometimes because the option was more expensive, but risking average $500 per trade, 486 wins, 80 losses. Right, that's 86% profit factor. At that point in time, the profit factor was 511. It's about 450, 460 right now. All right, so that's what that does. And again, I reiterate, these are the trades that I took because I can't post these and I can't alert in these. These are just trades I take in the room and I point them out in the room. This is what other traders are using all the time, using the SPY Super System to take these UMCAT trades. Again, here's the same performance right here. $500 invested in each trade produced about 46,000 in this time period. Pretty good for small amounts of money like that. These are, but it's very specific UMCAT trades. Okay. Hey, John. Hello. How are you? Okay. This was, and I just wanted to show some of the results I've had for the recent year. This is April. These are all of these things listed here. These are not UMCAT trades. These are trades I actually posted in the room and sent out alerts on, right? These are ones, if you're in the room and you followed me and you put $2,000 into each trade, this is what the results would have been. On the alerts in April, we had 5 wins and 1 loss, just 6 trades, not a lot of trades. 2,000 invested in each trade, netted $3,220 profit. In the room itself, we had 17 wins and 2 losses, 89% win rate, and 2,000 invested in each trade produced 88.33. It's a pretty good month in April, as you can see. But to see the percentage gains on most of these stocks for swing trades and intraday trades that are using in the money, you notice that they run. They're not talking about 200, 300, 400%. We had this 103 on the strangle, but mostly they're going to be somewhere between 15, 30, 45, maybe 50, 60%. That's typically, here's a SPY, 60% of the strangle. But those are the kind of percentages you're going to see on all the trades that we take. That's just so you have your expectations in line. I don't want people thinking that you're going to make 200, 300, 400% every time you take a trade, because it's not practical. Okay, this was in May. Again, we had 12 wins and 1 loss. This was just the room. 12 wins and 1 loss. 2,000 invested, produced 5,070 in profits. But again, see the percentage gains. Fairly consistent. 53% in UNH. Credit spread did 20%. Had a loser in this weekly ATM right here. But again, this is what trades in May. And we do have losing trades. And I had one losing month in 4.5 years. I did have one move. I think September of 2023 was a losing month. That's the only one that I've had since I've started this room, which was in January of 2022. And I started the first month of a 16-month bear market, and we still made money every single month. We have strategies that work to allow us to do that. All right, these are the July trades. I just kind of updated this. I've had another winner today. I didn't post it. We had another time spread, but these are our July trades. Apple 18%, Ping 15%, Fortinet 35%, a little loss on Apple here. We had time spread on CNC, BSX 25%, 20%, 5%, and 46% here on this time spread in Verizon. And also had today on ICE, we had another 25% gain in ICE on a time spread today. I'm doing a lot of time spreads right now because the market is very, very choppy, very difficult to swing trade. So we try to find something that works well, and time spreads have been working very well. Okay, Now, just to kind of go back over time a little bit, just so you can see what the results of the room has been. This was in 2023, 2,000 in each trade. We called it the Compass Option Room back then, was produced about 60,000. It's now the SPY Super System. 2024 produced about 55,000, 2,000 per trade. And these are results that you would have received if you were in the room or in the alerts, because these are all posted. These are not just my trades. These are trades that I call out and post in the room. And I take every one, by the way. Every trade that I call out in the room or post or put alerts on, I take those just like everybody does. So I know exactly where we stand as far as the trades are concerned. 2025, 2,000 in each trade, produced a little over 55,000. Very consistent, and the profitability in trades is much more dependent on what the market's doing. Trending markets will give you typically bigger profits because you can stay in the trade longer, and if the market's trending, you can take bigger risk. Choppy markets, we're going to have reduced profits because you have to typically get out early when you don't want to put big amounts of money into it. Okay. Now I'm going to look at some live charts now, and when I bring these live charts up, I'm going to show you the SPY Super System, and I'm going to ask you if you'd like to see a trade, if you want to see a chart on any stock that you want. Let me know if it's a daily chart that you want for a swing trade or a 5-minute chart for intraday trade, and I'll be happy to do that for you. Again, we're going to be looking at mostly UMCAT and SPY Super System trades. We'll also look at some swing trades if you want. And again, because the combination of the high probability trade setups, in other words, when the institutions are buying and doing that with high volume candles, that tells us that we've got institutions pushing that. And both of these systems produce about a 4% or more than a 4% win rate as far as a profit factor is concerned. Okay, let me go ahead and bring up the. Okay, so this is live on Thinkorswim right now. I don't have after hours on here, right? This is just current time, not after hours. I close it at 4 o'clock because it messes up if I'm using after hours. It messes up the indicators. So I want to leave this on here. This is just showing the current futures on the SPY futures right now in the ES. This does show after hours, by the way, the ES, but the stocks will not. Okay, SPY 15 minutes, John. You see, I don't use 15 minutes, so I'm never sure what it's going to look like. I'd have to go back and mess with it. It's a 1 minute there, and 30. I typically would use like an hour, 4 hours, and I don't have the 15-minute listed. You have to go back and, well, there it is, 15-minute there. See what the indicator is. Typically with the 15-minute, what you're going to do is you're going to get the indicator for the current time frame. It's not going to go through and calculate the 15 minutes for the multi-time frame, just because it's way too much processing to do that. And if you're just looking at a 15-minute chart, which you're probably going to use with a 5-minute chart, this is the only indicator you're interested in for an intraday trade. You're interested in the 5-minute and the current time frame momentum. That's what I look for. Okay. Hey, John, got that? Yeah. And typically, this is what these stocks look like. Now, I'll show you a couple that I've traded here recently. Let me look at what I looked at today. See, I did very few trades today that were intraday type trades. Let's see. I think I did a Core Z. That's about it today. Oops. Okay, Core Z. I go back and look at the beginning of the day here today. Let me pull this all the way back. All right, so I took Core Z this morning right here fairly quickly on these high volume candles right here, and I got out real quick because they started petering out. So I think I took about 25% profit on that, and I did take out of the money, but because it was green and I had white candles, but I was out very quickly on that. Let me show you another one. This was yesterday. I took a TLT. TLT. Yesterday I took it close to the end of the day on TLT. So let me go back to yesterday. Yeah, this is where I took TLT yesterday. On this trade right here I took it right there at 320, and I get out right here, and I took it out of the money put in the TLT. It was trading at about 83 and some change. I took an 83 put. It wasn't there yet. I paid 7 cents or $7 a contract for that, and I get out 2 candles later for $14. 100% profit on just that quick trade like that. And you can see the setup. See the institution selling. It was breaking below the 8. I probably could have got it here if I didn't. I don't think I recognize it. But that TLT worked very, very nicely on that trade right there. Okay, let's see. All right, let's see what other things I used. Let me look at something I just want to identify something so I can show you some of the actual results. Yeah, I had marble on the 16th. Marble on the 16th. So we have to go back a little bit for that. It was tricky to get this thing where I want it to be. Marble. All right, so I don't know if we can go back all the way to the 16th. Probably not. That's going to be further back than this will go. Well, there it is right there. So this was a marble trade. Short. See the institution selling? Institution selling right here. Here's the breakdown between the 8 and the VWAP and the 15. You just write it right down, and then of course you get out right there and then pop. That was a pretty nice trade on marble. I haven't done an awful lot of trades this week. The market has been fairly choppy. Oh yeah, the Irene. We used Irene yesterday. Let me go to Irene. Yeah, and I'd be happy to show you any trades that you might be interested in looking at. Irene was yesterday. It was right here, first in the morning. Took Irene early. That was I get in for $1.42 and out for $1.65. About a 20% profit, and this Irene moved right here. Again, then it starts to peter out and get out of the trade. Okay, so let's see, anything else here? Yeah, I did show you the TLT. So those are the kind of trades you take. I could go through it, bunches of them, but I have to go back to each 5-minute candlestick, and that gets each day that takes a little bit of time. So let's see if we can't see if there's anybody here who wants to see some trades. Okay, let me know if you want to see anything, because this basically is the presentation on the SPY Super System. I'm going to go into this. If you're interested in staying, I'm going to go into some deep diving on technical analysis and how to find the very, very best trades by using these indicators. All right, really important. So I'll be happy to do that. Again, I'll give you a minute in case you want to throw anything in there. I'm looking at some trades right now to take for swing trades. Joshua, you really don't see the link. Hey, question, but no idea what I'm looking at. He said, "Oh yeah, you'll get replays in all of this." And what I'm looking at, obviously, is I'm just showing you the chart for an intraday trades. This is a 5-minute chart, and a lot of people have stocks that they're trading or they're interested in trading, and they'd like to see how it sets up. And Jack, does it work with futures? Yeah, it works exactly the same with futures. It works exactly the same with futures. Here's the ES today. Here it is right now after hours. Here's the ES this afternoon, all day long. Moved up strongly this morning. If you trade futures, you know that. Had a big move up, then got kind of weak, came right down to the VWAP, and then moved off, and then a pretty good afternoon moving up here. Same thing as the NQ. Same thing on the NQ. NQ it was up big today. I mean, NQ was up over 3.5%. The Qs are up over 3.5%. They look very similar to the actual indexes, but a lot of people like to trade futures. So you can trade futures off this. You can trade anything except FX off of this. You can trade commodities. You can trade gold, silver, oil, whatever you want. MP, please. Okay, let's do MP. Are you interested in the 5-minute chart or the daily chart on MP. There's MP in the 5-minute right there. Daily, okay, switch over to the daily. We can see what it looks like there. Okay, so here's the daily on MP. Been very, very weak lately. You see this bounce today, you see what it did. Now, when you look at this, what you're looking at is here's the 200-day moving average, here's the 100-day, and here's the 50. Right? You see it's below all of those. It's been in a downtrend for a while here on MP. It's been down pretty hard and high volume candles. So you'd be watching here, if I was going to watch this, if this breaks down again tomorrow below this 8, because this 8 is a resistance level, I would be interested in going short on MP. And I wouldn't be interested in going long on this until it breaks above the 8 here in the 15, and this goes to blue or green. I'm not going to touch this if both of these stay red like this. So this is, if you took this as a short a while ago, you'd be in really, really good shape. What platforms can you use for? Well, for the actual SPY super system indicators, it just runs on Thinkorswim and it runs on Ninja. But you can trade on any one you want. I mean, you don't have to pay for Thinkorswim. You can just get Thinkorswim, load it up on your system, right, and load the software on it. And at that point in time, you're going to get all the indicators that we get right here. And I don't trade off of Thinkorswim. I use Tradier to do my trading. So I'm not trading off of Thinkorswim. I'm trading off of Tradier. But I'm using these indicators to tell me when to get into trade and when to get out of a trade. You have Ninja, okay? It'll Rightline can put it on Ninja for you. Yep. And typically most Ninja traders are using trading futures because they have a really good commission on futures, but not on stocks. How many days am I typically in a swing trade queue? Yeah, it's a good question. I think most of the swing trades I take last normally overnight to 2 days or so, 2 or 3 days. My dog is over here trying to bug me for a cookie. They last typically 2 to 3 days, up to a week, week and a half. But I'm not in them for more than 2 weeks at the most usually. But typically I'll go out in time on them, sometimes 3 or 4 weeks, but I'll take them off before it gets to that point. Just depends when the earnings are going to be. You don't want to be taking a trade over earnings, so that's how I decide. Okay. Anything else? I'd be happy to. Okay, Hugh. Yeah. Again, swing trades in this market right now. A lot of the trades we take, I take them overnight and I take them off the next morning. And the time spreads almost always we take off the next day. Not always, but generally speaking, we take them off the next day. So we'll be seeing how they perform, because we get our answers pretty quickly on time spreads, because the implied volatility, once the earnings come out, the implied volatility gets crushed. That's when we're likely going to get our best profit right there. Okay. Then what I'm going to do here is I'm going to, now that covers this again. I do want to cover one thing here. These are scanners. We have multiple scanners. This is called cascading up. This shows you stocks with relative strength, and this is set up right now for a 5-minute chart. But I also have cascading up here for a daily chart, right? So what that's going to do is going to show me stocks that are bullish on a daily basis, right? Make sure I get that in daily. Cascading up daily right there. All right, so here's the stocks that look bullish on the daily chart. So if you click on them right here, they're going to pop up there, and you're going to be able to see that you've got high volume candles on the daily chart. So these, you can make a determination of whether these are good stocks for a long swing trade. And if I go to cascading down, I have cascading down on the daily. This is going to show me stocks that are potentially good shorts, right, for short trade on a daily basis, on a swing trade. You can see Meta took pretty good hammering today. So this is how you find that. And if I go back to the daily one, to the 5-minute one, which is just say cascading up, and I click it, no, these are going to show me what these stocks are doing on a 5-minute basis. So I just click this over to 5-minute. I'm looking at it on a 5-minute basis, and this is what these stocks are looking on a 5-minute basis at the end of the day. You can see how strong some of these stocks are into the close. Notice a lot of high volume candles, by the way, in the open and the close. high volume candles are much more important middle of the day because they're much less frequent. Right, there's Baxter with a nice one. So that's how you look at those things. Hey Barry, Abbott 821 put. Okay, you're talking about a swing trade in Abbott, right? So let's take a look at the daily chart. Let's look at ABT. Okay, and you've got an 821 put on this one. Okay, all right, 821 put. So here is Abbott. You can see it's climbed up pretty nicely here. It's very green. It's very green right now in Abbott. Doesn't have earnings anytime soon. So this is pretty bullish on Abbott. Now it isn't the 200-day moving average, which is going to be resistance, but I can't consider the stock bearish right now. It's way too much. There's way too much strength in Abbott right now. So, and I have no idea, of course, when you took this, but because it would go back a ways. You can see there was some bearishness, a little bit of bearishness back in here, but this is still pretty strong on Abbott Laboratories. On Abbott. So if I look at the daily chart, you can see it fell down today, hit the 200, fell down to the 8. What's it going to do from here? I don't know. I don't have any idea what it's going to do from there. 110 put, 110 put. Okay. You got 110 put up 155. I'm not sure. Did you sell the put or buy the put, Barry? Because you got $110 put on this thing. Yeah, you're in the money by about, I guess, $5 or something like that in the put now. Yeah. Buy it. Okay. So you bought the puts. You bought the puts that were deep in the money, I'm assuming. So and what it's going to do from here, I don't know. I mean, right now, you can see you're up against the 200. I think you'd like to see this thing stay below the 200-day moving average. Bought on 729. All right. Oh, just yesterday. Okay. Yeah, you still bought it here, which actually I can see why you did that. You did that. You bought the put because it hit the 200-day moving average, looking for a move down, right? So I can see the strategy here. Again, the 200 failed at this point in time, so you made some money on it. So you're up decent. I think you want to make sure that this keeps going down. You don't want it to get back up above the 200 again. If it gets back above the 200, you're going to want to take your profits on that. So you took a deep in the money put, looking at it for a drop below the 200 right here. Again, you can see the institutions are still buying the heck out of this thing. So it's still a very bullish stock. But I can see technically why you did it. Okay. All right. So I'm going to wrap that up. I appreciate all the questions. I appreciate the information. You're welcome, Barry. No problem. And I'm going to go ahead and back to the presentation here. And that kind of covers it. What I'm going to do is I'm going to show anybody who's in the room is interested in these specials. I'm going to show you those now. And then if you're interested in doing some deep dive into how we use the indicators together to find the very highest probability trades, it really makes a difference. And I just kind of want to cover that for anybody who wants to stay and do that. But in the meantime, for anybody who's ready to get involved or ready to leave, you can go ahead and this is the live offer on the trading room and the alerts, right? And I think they'll take up to 25 free trials today if they want. I have to obviously manage all those folks when they come in. But basically, the quarterly membership is $396 a quarter after a 2-week free trial. That gives you the trading room and the alert service. It gives you all my trading videos, which I have a lot, about 32 of those things. And we've got an AI trade analyst coming soon. This is basically going to be an AI scanner. It's going to scan stocks based on the criteria that we define and feed them back to us so we can use those to trade from. A cheaper deal, of course, is to do the annual membership. Same thing, obviously. You get the room and trading room, the alert service. You get all the videos. $14.98 a year, which is a really good. I'll show you at the end. This really good price because the average return for the trades for if you has been about 40x, about 40 times return what you actually paid for. What you ended up paying for a subscription cost. And now, if you want to get a one-time payment, you can get in for $24.98 forever, into the room forever. And again, this is one you can you can do right now. And I believe there's a link in the chat box for these. Let me look. Yeah, there's a chat box in there. The chat box has a link for both of those in the chat box. Okay. Now for the SI Super System, this is the software. If you're interested in the software that we just showed you, this is what you get. And you get the SPI Super System software. Obviously, you get all the updates to it as we change it, add to it. You get a month in the live options room, and you get the scanners, of course. You get my training videos, and you get it installed by Brightline. They'll just take over your machine, plop it right on either Ninja or Thinkorswim. Like I said, I use Thinkorswim 1998. But what they've got here for this Traders Corner is you can get the SPI Super System software one-time payment for free. In other words, from 1998, installed for free. It's the same as it is for the annual membership. This is so basically it's saving you $1,000 and you don't ever have to subscribe. So this is what you're going to take if you want to buy the software. You definitely want to take the lifetime since it's the same price. Okay, so those are our two offers today on the room and the alerts and the software. Again, and by the way, when you buy the software now, you're going to get 3 months in the live trading room because it's a lifetime. Okay. I'm going to give everybody a chance here to take a breath. I'm going to go ahead and drink some water. Then I'm going to go into a deep dive into the Super System indicators, how to maximize your trading performance here. Gulp of water. I've been trading all day and talking in the room all day, so I'm a little bit hoarse. But I love trading. Okay, this is a deep dive for anybody who wants to stay in here. This is a deep dive into the SPI Super System indicators and how to maximize your trading performance. Okay, I call this profits in harmony, and it sounds a little strange, but I call it the symphony trade. And the reason I'm doing this is I'm trying to use an orchestra as an example of how you're supposed to find high probability trades. How many things have to work together to find the very highest probability trade. So again, indicators taken alone don't make a trade entry. A lot of retail traders make big mistakes by looking at just one indicator or two indicators and thinking they should take a trade off of that. If you're looking for the very best trade, you've got to use these all in conjunction. So only using all the key indicators taken as a unit predicts a high probability trade. And many traders are going to take trades with one or two of these. Again, it's going to lead to more losing trades. So I'm using the symphony orchestra as an example. What we're saying is no single instrument makes a symphony. They can make sound, but they can't make a symphony. Only all the instruments working together in unison make a symphony. So that's what we're looking for. Each one of these signals, indicators, is kind of like an instrument. So one signal is noise, all signals and lines is a symphony, and we want our trades to be a symphony. All right, that's what we're looking for here. That's why I call it profits in harmony. All right, so this is a trading symphony. We're going to go through some of these things. Again, this is the things we're looking for. You've got trend. This is important. Those are your moving averages. The SPY, what's the SPY Super System saying? What's the actual SPY trading doing itself? What's the SPY doing on the 5-minute chart? Is it bullish? Is it bearish? Is it choppy? Then your volume comes in, right? So we're going to cover all these things and how this helps us trade. Okay, so I call this the symphony mindset. A great trade is not one loud instrument. It's the orchestra playing in perfect unison. And the whole idea of using this orchestra analogy is to try to get traders to think about this in their mind when they're taking a trade. So maybe it'll get them to maybe look at more of the indicators and think about that everything is working together. Now I've got the trade, and if I don't, I've got just a cacophony of sound. How when an orchestra sounds when it's warming up. Okay. Again, our system isn't about prediction. It's about listening to the market's music and entering when the orchestra is in harmony. Again, it might seem hokey to some people, but this is a way to get yourself to focus on looking at all these indicators together and how to find the very best trades. Again, this is the framework. How a stock and option strategy mirrors a world-class orchestra. A single indicator is like a single instrument. It's capable of sound, but not a symphony, right? Might sound nice. A high probability trade is a symphony. Multiple instruments, indicators playing in alignment, in rhythm, and in the same direction. That's what we're looking for. So market overview notes. These are things to be aware of when you're making trading decisions. This is important. This is really important. Trend days, trade the stock on a trend day, trade the best stocks trending with the market. These are days when you can actually take trades and stay in them for a while, right? And you can probably take bigger risk on trend days. Choppy days, you're just going to trade the best relative strength and relative weakness stocks you can find. It doesn't mean RSI. That's what I meant when I said relative strength. How is the stock trading in relationship to the SPY or the Qs? Really important, right? In most days, there's going to be a lot of high volume candles early in the day. As I said, right at the open, 9:30 up to about 9:45, 9:50, there's going to be a lot of high volume candles, and there's going to be a lot near the close. So it's best to wait 15 minutes to a half an hour after the market open to place new trades and not trade the last half an hour, right? And you obviously can be closing trades in the morning. One of these sayings I don't think I have listed here is gaps are gifts. If you're in a trade long and you get a gap overnight and it gaps up, take the money. I call it gaps of gifts. When you get a gap up in the morning or a gap down on a short, you want to take the money. Two reasons. One, the implied volatility is going to be much higher on a gap up. That's going to jack up the price of the options. And the likelihood of a stock doing a gap up and going, in other words, gap up and continuing, is the least likely of the options. I mean, you figure there's three of them, right? There's gap and go, there's gap and chop, and there's gap and crap. It just turns around and heads back down again. But gap and go is the least likely, and it's less than 1/3. It's well less than 1/3. So that's why gap gifts take the money. Okay. Using the key indicators for intraday and swing trading, right? So for intraday trades, SPY Super System current trading frame momentum, the one we talked about on the SPY Super System. This is the most important one. I have to trade with that. I won't trade against it. I'm going to trade with it. All right. I mean, you can do counter trend trades. We were just pointing out here a trade that he took on the stock that went up to the 200 and turned down and took puts in it and made some money on those puts today as the stock bounced off the 200-day moving average. That is a very understandable trade for me. But especially for new, fairly green traders, you're much better off sticking with what the institutions are doing and sticking with that, because you have to be able to read price action, which he did, and it works for them. And I mean, I do trades like that, but I'm not going to typically alert people on a trade like that. All right, and the next ones that we're interested in on the 5-minute is the VWAP. We mentioned that, the volume weighted average price, the 8 exponential moving average, the 15 exponential moving average, and look for high volume candles and then relative strength and weakness. This is it. This is how you find intraday trades that are going to work. You're looking for a long, you want to have the stock above the VWAP, you want the 8 above the 15, and you want the stock price breaking through either the VWAP or the 8 exponential moving average with high volume candles. That'll give you the UMCAT trade, especially on a stock that has relative strength. Okay, those are the indicators that you use together. All of those are going to give you the best setup you can. Okay, if you're way away from the VWAP, too far away from it, you don't want to take it. It's too far extended, your risk is too high. And you can get away with taking trades if it doesn't have high volume candles, but not out of the money puts and calls. No UMCATs. They would be SPY Super System. You'd be using in the money puts, in the money calls on those kind of trades. All right. Now for swing trades, SPY Super System current time frame momentum, SPY Super System multi-time frame momentum. Right. Both of those together. They both need to be bullish or bearish. Then on the daily chart, you're going to look for the 50 SMA, the 100 SMA, and the 200 SMA. These are key support resistance levels that all the institutions use. So if you're going to go long, you don't want the stock to be going to run into the 50, the 100, or the 200. You want to have some room to the next resistance level. Then the 8 and the 15 EMA on the daily are also support resistance levels. So we use these. I use all three of these for support resistance levels on a swing trade. Then high volume candles again gives you much more confidence that stock's going to move, that trade's going to work. And then market trend. When you're doing a swing trade, you kind of want to be trading when the market is in a market trend. Right now, the market is chopping all over the place. It has been since the beginning of June. It's chopping up, chopping down. It's very hard to stay in swing trades for long at all. So when you don't have a good market trend, you've got to cut way back on your swing trades. Do mostly intraday trades, or you can do like time spreads, something that's non-directional. but you don't want to put a lot of money into swing trades. Once the market turns either bullish or bearish as in trending, then you can start to join in on those. It's very important to, when you're ramping up size, when you're going for more profits and staying in trades longer, that you've got the market giving you the confidence to do that. If you trade a lot of swing trades and stay in them a long time in a choppy market, it's not going to end well. Okay, now using the intraday indicators for swing trades, for SPY Super System current time frame momentum on the intraday trades, right? They got to be green or blue for long, red or yellow for shorts. We covered a lot of that. The VWAP, a key support resistance level. Price must be above the VWAP for long and below the VWAP for shorts. The ADMA, also another key support resistance level. When the 8 is above the 15, the trend is bullish. When the 8 is below the 15 is bearish. We covered that. Okay. Now, one other thing here. Now, this is really important, and this is something that I emphasize all the time. I don't know an awful lot of other traders that talk about this, but this is really important. The 15 EMA, when you're trading, when you use it with the 8, all right? A secondary support resistance level. When the 8 EMA is below the, when the 15 EMA is below the 8, the trend is bullish, right? The 8's above the 15. When the 15 is above the 8, the trend is bearish. When the price breaks below the 8, when the price is in an uptrend, in other words, that would, let's say you get in at the 8 and the stock comes back and breaks down below the 8. The 15 is often going to act as support. In other words, you've got two supports here. You've got the 8 and the 15. The 15 is likely to offer support for that trade. So when I'm in a trade and it breaks below the 8, I'm not going to get out until it tests the 15. If it goes below the 15, I'm out. But a lot of times, many times, it'll bounce off that 15. Okay. And the opposite, if you're a short and the stock comes up and goes through the 8, right, moving to the upside with the 15 above it, you stay in the trade until the 15 gets broken, because a lot of times it'll go up, hit the 15, turn around, and head back. Okay, this is I use this all the time, and it's been extremely effective. Then your high volume candles. Again, the bullish high volume candles are white, bearish are yellow. And the high volume candles can indicate strong institutional buying and selling, and it's critical to have high volume candles for UMCAT trades, which should only be for intraday trades. Okay, all right. So now entering intraday trades. This is swing trades. I'm sorry, this is intraday trades. This is day trades. Current time frame momentum is what we're looking at. It's got to be bullish, or blue or green for bullish, red or yellow for bearish. Right? That's what we're looking at. Just the current time frame momentum. There should be no nearby resistance above for a long or support for a short. That also means you've got to look at the daily chart to see if you're anywhere close to the 50, 100, or 200 SMA. You're not going to trade on that, but you don't want to be taking a trade that's very close to that, because it's going to offer resistance. Just like the trade we showed a little while ago, when one of the members there that was in the webinar today took a short when the stock hit the 200. That was the 200-day moving average. It offered resistance. The stock moved back from that. Right? You wouldn't want to be going long when it was up there. Enter intraday longs on price break over the VWAP or 8 EMA if the trend is bullish. Enter intraday shorts on price break below the VWAP or 8 EMA if the trend is bearish. We talked about buy at support, sell at resistance. And high volume candles on the break indicate strong institutional involvement and increased probability of success. High volume candlesticks always indicate higher probability of success. Tells you the institutions are in there with force. All right, entering swing trades. You got to use the daily chart only. Right? There's several potential entries into a swing trade. Now you can use the 5-minute chart to find your best entry, but when you enter a trade off of a daily chart for a swing, you're going to exit off the daily chart unless you're getting ready to take profits. In other words, if you get into a stock that's bouncing off the 8 and then it pulls down below the 8 the next day a little bit during the 5-minute candlesticks, you don't exit there. You wait to see what it looks like at the end of the day. So you get in on a daily chart, you get out on a daily chart. So for swing trades, bounce up off the 8, 15, 50, 100, 200. Any of these moving averages, simple or exponential, those are all support resistance. Any bounce off of those is a good long. Any bounce off of them when they go up and touch them and head down, that's a good short. Another good one set up is a breakout down from compression. The stock's been moving sideways for a good long time. It breaks to the upside, you get a high volume candle, nice potential long. Breaks into a gap fill if you've got a big gap fill that the stock creates. That's another one. And a PBO, what's called a P pullback opportunity. That's when a stock pulls back to a support level like the 8, and then bounces off of it and it goes back into the original trend. That's a PBO, and these are extremely effective. Extremely effective pullback opportunities. Now for current time frame momentum and multi-time frame must both be bullish. These are for swing trades, right? And bearish for bearish swing trades, red or yellow, right? So you're going to enter a swing long on a price bouncing off the 8, the 15, the 50, 100, or 200. All 5 of those. Those are your 5 support resistance levels that are key for getting in at a support level. Enter the intraday shorts on price bouncing down from the 8, 15, 100, 50, 50, 100, or 200. All of those 5, right? These are support resistance levels. This is what you're looking to trade off of. And again, high volume candlesticks on the break indicate strong institutional involvement and increased probability of success. And the stock should not be more than 1 ATR extended from the ADMA. That means the stock, when you look with a stock in it and you see where the 8 is, if that stock is more than 1.5 ATRs, and ATR means average true range. If that stock moves $10 a day, right, the average true range is $10. If that stock is more than $15 above the 8 exponential moving average, it's too far away. It's very likely to revert to the mean. It's going to come back down again and get to the 8. So you don't want to chase them when they're up there like that. And never take swing trades over earnings. Only takes earnings trades with time spreads. Please don't try to take trades over earnings, especially with options, because the options have been increased in price by so much that stock has to go so far above or beyond what's expected by the market makers to make you any money. They're almost always, it's a losing proposition. You're going to lose money trying to trade options over earnings unless you're doing like a time spread. Even straddles and strangles don't work because they're too expensive. They've covered, the market makers cover themselves. I like the market makers today. When I was watching the market action on the option prices, they were ridiculous on some of these stocks. They had these things spread out. They normally are spread by 50 or 60 cents. They were spread by $3. So basically, I likened the market makers today to loan sharks. I mean, basically, they're just saying, here's a trade. You can pay $3 more than you should for this, and they're saying to you, be ashamed if something happens to your option. Basically, so you got to be very careful about that type of thing. All right, for both intraday and swing trades, always be aware of the closest support resistance levels are. I think I probably emphasized this enough. For intraday trades, the 50, 100, and 200 on the daily are support and resistance. We just covered about this. Know where they are so you don't trade into them. Same thing for the VWAP 8 and 15 on the 5-minute chart. Know where they are so you don't trade into them. Right? And for swing trades, the 50, 100, and 200, as well as the 8 and 15 on the daily chart are support resistance. Again, for a stock to break through support or resistance, it generally requires high volume. If you got a stock that's pushing a lot of volume and it's maybe coming up to the 8, it's likely to break through it, or even out of compression, it's likely to break out through the high. It would be the compression break. With high volume, it's much more likely to do that. Okay, now this is something that a lot of people ask me about, this anticipatory trades versus confirmation trades. Right? There's a difference here. When a stock breaks out of compression or goes down and touches the 8 and starts to bounce, if you don't have a confirmation that bounce is going to continue, like if a stock breaks out of compression, a lot of times it'll break out of the compression, come back down, bounce off of it again, head back up again, right? Well, if you take it on the initial break, any trade you take on the initial break of support or resistance or the break of compression, that's called an anticipatory trade because you don't have confirmation that the trade is going to work. If you wait for it to pull back to support and then bounce, that's a confirmation trade. They're both valid. Okay, these are both valid. Again, a trade that goes an immediate breakthrough support or resistance is a anticipatory trade, and a confirmation trade waits for a retest of support. Both of these trades are valid. However, anticipatory trades will fail more often than the compression trades, the confirmation trades will. But when they do work, they make more money because you get in sooner, right? You're getting in right on the break. So it's kind of a double-edged sword. They're both valid trades, but you want to be aware that if you get into an anticipatory trade, you're going to have to be very careful, because as soon as it breaks through that breakout level, breaks back down through it again, you've got to take your losses. All right, so that is what I wanted to wrap up today. I just wanted to try to go into that. It's kind of like an educational section, and I hope some folks found it interesting as far as that is concerned. Again, and here's the specials again: a live trading room and the alert service, $396 a quarter with a two-week free trial, $14.98 a year for that. Again, that comes with the trading room and the alert service and the videos I do, all the 31 videos, training videos I've got, and a Discord room. A one-time payment, $24.98. That gets you the room and the alerts forever. Okay? And the Spy Super System, the software here is right here, $19.98. Right now, they've got a special $19.98 forever, lifetime. It's usually $29.98. So that comes with 3 months in the room, the trading room. Obviously you get the scanners when you're in there, and you get all my training classes, and you get the software installed on your Thinkorswim or NinjaTrader by Rightline. Okay, so that kind of wraps it up for today. I appreciate everybody being here. I appreciate the questions, and appreciate your attendance. I hope everybody has a great evening. We'll be back at training tomorrow. So anyway, I appreciate you being here. Thanks very much. Look forward to seeing some folks in the room in the near future, and have a great evening.